Alright, so today we're going to continue chapter 4. Yesterday we started talking about debits and credits, the left side and the right side of the accounting T. It's a tool that we use to analyze different transactions. But today we're going to go a little bit deeper. We're going to actually look at some transactions and figure out which side of the accounting equation or which side of the T-chart they go on. The first transaction we're going to look at is on October 1st, Krista Vargas took $25,000 from her personal savings account and deposited that amount into the business checking account. In the name of Zip Delivery. Remember, Zip Delivery is the name of the business that you work for, that you're keeping the records for, and the one that she's the owner of. So she took some of her own personal money, and she took it and she gave it to the business to use. This is called an investment. She invested $25,000 into the business. So the first thing you got to think about is which accounts are affected by this transaction. The first one would be cash. You would know that one of the trigger words in this transaction would be checking. Anytime you see check, checking, a check written, you know that the cash account is affected. In business, that's where we keep our money, inside of a checking account. The other account that would be affected in this transaction is capital. The owner didn't take out a loan in order to get the $25,000 to put into the business. This was her own money that she was saving up that she gave to it. So if the business were to sell tomorrow, liquidate all of its assets, the owner has a claim to that $25,000. It would be her $25,000 that she would get back. So now that we know which two accounts are affected, we have to think about, well, which side do we record the transaction on? And the first thing you have to look at is the class of the account. So cash. Is cash an asset, a liability, owner's equity? Well, we know that cash has value, so it's considered to be an asset. So if you look at dead COIL, the acronym that we were using yesterday to figure out which side it goes on, you find the word assets over here on the dead side. And all the accounts that are listed under the dead part of dead COIL, pretty much that tells you that their normal balance, or the side that you would write it on if they increased, would be on the debit side. Now, because they will increase on the debit side, if any of these three accounts were to go down, you would do exactly the opposite and you would write it on the credit side. So right now we look at cash. We said that cash is going up. The amount of cash is $25,000. So here you can see it was written on the debit side under cash for $25,000. The next account we're going to look at is our capital account. Again, you have to ask yourself, is capital an asset, a liability, or is it owner's equity? We know that it's owner's equity because the owner would get the value back if they were to liquidate all of their assets of the business. So again, we go to our dead COIL acronym that we use and we try to find owner's equity. You can see you have the choice on the dead side or on the COIL side. Owner's equity is listed on the COIL side, so we know that if that account increases, you would write the amount on the credit side. And this is what it would look like. We credited our capital for $25,000. Now every single transaction has to have an equal debit and an equal credit. So we can look back and see. We have $25,000 on the debit side in cash, and we have $25,000 on the credit side in capital. They equal each other, and we know that we've kept the accounting equation in balance, and we're ready to move on to the next one. The next transaction we're going to look at today is one that uses the owner investing, not necessarily cash, but the owner in this case is investing assets. So it says, on October 2nd, Krista Vargas took two telephones valued at $200 from her home and transferred them to the business. So she was basically taking two telephones that she has at her house and saying, I don't need them at my house anymore. I'm going to take them and I'm going to bring them for my business to use. She's investing, even though she's not giving cash, she's investing in another asset, something of value that she's giving to the business to use. So we have to think about, well, which two accounts in this case would be affected? First of all, what is she giving to the business? She's giving them two telephones, so we might find two telephones in an account called office equipment. That would be the account that would keep track of the total value of all the office equipment that we have. So she increased that. The other thing is that she's making an investment, and we know anytime the owner invests something of their own, some personal asset, we know that that capital is also going to be affected because that shows the claim of the owner to those assets. So capital and office equipment are the two accounts that are going to be affected. Let's take a look now and figure out which side we write the amount on. Again, we go back to dead COIL, which kind of helps us figure it out. So we'll look at office equipment. You got to ask, office equipment, is it an asset, a liability, or owner's equity? Does it have value? Yes. So office equipment is considered to be an asset. You could sell it and get cash from it. So we go and we look at our asset side of dead COIL. So in this case, we know that these three, if they increase, we would write the amount on the debit side. And because the business is getting more office equipment or more value in their office equipment, the owner's giving them some telephones, that it goes up. So we would write it on the debit side of our T account. Now the next account we're going to look at again is capital. Is capital asset, liability, or owner's equity? We also know that capital is owner's equity. If you were to sell the telephones tomorrow, the business went out of business, and you were to liquidate all your assets, and you sold the telephones and got $400 back, the owner wouldn't have to give any of that $400 to the bank. The owner transferred it to from their own home, so they have all the equity. They have a claim or a right to the value of that asset. So capital is affected. Is capital going up or down? Capital is absolutely going up. So we find capital or owner's equity again on the credit side. When they increase, we write them on the credit side. And here we go. We have $400. 2 telephones worth $200, and we would credit capital for the $400. Are we in balance? Absolutely. We debited office equipment for $400, and we credited our capital account for $400. We have equal debits and equal credits. Now listen, it's okay. Debits and credits always have to equal each other, but remember, that doesn't necessarily mean you can never have 2 debits, 2 accounts that both have debits, or 2 accounts that both have credits. There always has to be an equal amount. So one account has to have a debit, and the other account has to have a credit. That might help you work through which sides you need to put some of these transactions on. All right, let's look at another one. So in this case, on October 4th, Zip issued a check for check number 101 for $3,000 to buy a computer system. First trigger word we see in here, check. We know anytime we see the word check, the cash account is going to be affected. So let's see, what are we spending cash on? First of all, we said that cash was going to be affected, but what we're buying is a computer system. So the account that we would record that in is computer equipment. And we said that cash is what we're spending to get it. So let's look at the first one. Computer equipment, is it an asset, a liability, or owner's equity? We know that it's an asset. If we went out and bought computer equipment, the value of our computer equipment in the company would actually increase. So we see, because it's listed on the debt side, that all of these, when they go up, we write them on the debit side. So computer equipment for $3,000 would be going up on the debit side $3,000. Other account affected was cash in the bank. So is cash in the bank an asset, a liability, or owner's equity? Yes, it's an asset. So here we see an asset here, we can circle it. We know that it's on the debt side, but here's the trick, and this is where a lot of people get confused. Yes, it's an asset, and we know that the normal balance, or the side that it goes up on, is on the debit side, but in this case, if we're writing out a check, if we're spending money to buy a piece of computer equipment, is our cash going up or is it going down? It would be going down because we're spending that money to get the equipment. So even though it's listed on the debit side, whenever it does the opposite or it goes down, what you need to do is you need to do the opposite and write it on the credit side. Dead coil is really only good for showing you which side it increases on. So you have to know if these 3 go up, you write on the debit side, but if these 3 were to go down, you would then have to reverse it and write it on the credit side. You see it here. We have computer equipment, it went up $3,000, so we wrote it on the debit side, but cash in bank went down, and in that case we would write it on the credit side to show that the asset decreased. Next transaction we're going to talk about. On October 9th, Zip bought a used truck on account, another trigger word, from Coast to Coast Auto for $12,000. So we're buying a truck, but are we paying for it in cash? No, we know because it says on account that it's accounts payable. It means that we're going to pay for it later. We're buying it now, we're taking the truck back, we're using it for our business, but we're not giving them any cash right now. We owe them the money, and accounts payable is the account that shows how much money we owe everybody. So the first one we're going to talk about, what did we buy? We bought a truck. Let's call it delivery equipment. Okay? And what did we use to buy it? We didn't use cash, so we owe the money, and the account that shows how much money we owe? Accounts payable. You put the name of the person or the company that you owe, and that's Coast to Coast Auto in this case. So let's analyze these two. Delivery equipment, asset, liability, or owner's equity. It's an asset. It has value. If you were to sell your delivery equipment, somebody would give you money for it. It has value. So let's look at dead coil. Does it fit under dead or does it fit under coil? We see here it's an asset. So now we got to ask, is this asset going up or down? Well, we just got a delivery truck worth $12,000. So our assets just increased. We just got a new truck. So if the assets go up, remember, any of these 3, when they go up on the dead side, you have to debit the amount. So we're debiting delivery equipment for the value of the truck at $12,000. All right. Accounts payable shows us how much we owe our creditors, how much we owe for the things that we bought. So in this case, if we are buying something new, we are owing more money, right? We went in there, and when we started, we didn't owe them any money for the truck, but when we took the truck out, we signed the paperwork, we now owe them $12,000. So if accounts payable shows how much we owe, that account just increased. So is it an asset? Is it a liability? Owner's equity? What is it? It would be considered a liability, right? Accounts payable is a liability. It's something that we owe, money that we owe. And we find that on the coil side. So these three, when they increase, we would credit it. And because we owe money now after we bought the truck, we would put it on the credit side of accounts payable. Let's check to make sure we're in balance. We have $12,000 on the debit side, and we have $12,000 on the credit side. We're in balance. We can move on. Next transaction we're going to look at. On October 11th, Zip sold one phone on account to Green Company for $200. So some words you got to pay attention to here. On account, right? And also the word sold. So we sold something on account. We sold, what did we sell? We sold a phone. And if you sell a phone on account, are you getting the money for it right away? No. You're basically telling the customer that they can pay you back later. So which accounts would be affected? The account that shows us how much money is owed to us as a company is called accounts receivable. And the account that shows us what it is that we sold, in this case it was a telephone, so we're probably going to put it in office equipment, right? So we're waiting for the money back. Office equipment is the account that shows the telephone that we just sold. So let's go and analyze and figure out which side we put the value. We know that it's for $200. So accounts receivable, asset, liability, or owner's equity. It's an asset. Probably the most confused asset that's out there. Accounts receivable, if somebody owes you money and they sign a piece of paper that tells you that they owe you a certain amount of money, you could absolutely take that paper and sell it to somebody else. That has value. You can sell it and you can get money for it. So accounts receivable is an asset. In this case, is it going up or down? It's going up because we're owed more money after this transaction. So we would write it on the debit side. It's on this list. It's going up. It goes on the debit side. Office equipment is also an asset, but is that asset going up or down? If we're selling somebody some of our office equipment, the amount of office equipment that we actually had is actually going down now because we just sold some of it. So again, you find asset on here, but in this case, it's going down, and if any of our assets go down, we do the opposite, and we write the amount on the credit side. So are we in balance? We have equal debits, and we have equal credits. Next transaction we're going to talk about. On October 12th, Zip mailed a check for check number 102 for $350 as the first installment on a truck purchase from coast to coast to people that we owe money to. All right, a couple words in here. One, you see the word check, so you automatically know if it's a check,